You wonder how to build a proper positive business credit score? Then you have come to the right place. Hi everyone, welcome to my YouTube channel. This is Samantha. I am a financial expert and help companies build their business credit. Today we're gonna talk about building business credit for 2023, so let's start. We're going to be talking about what you need to know to successfully navigate business credit building in 2023. We know the economy is shifting and consumer confidence is declining, which means fewer people are buying. Therefore, we need to have the money to pull ourselves through that business credit key to get there. But how do you succeed to successfully get access to the money you need for an uncertain future with a potential with record high inflation? Here, let's dive in before we do. Take WEX Fleet, for instance. They no longer accept personal guarantees the same as it is in the business funding area, as we observe more and more individuals actually entering and being more conservative with their standards. This occurs frequently each time the economy swings. Before it happens, we get into lenders and credit issues tighten up, lenders and credit difficulties tighten up. All these changes start to take place, and as we actually go into a true recession, then all of these changes start to take place. When all hell breaks loose, a lot of these things become more difficult to obtain. Therefore, what we must do is ensure that you have a successful financial road plan. It's crucial that we act now because if conditions worsen, there will be increased need for loans, credit lines, and other sorts of financing, including corporate credit, into 2023. Financial uncertainty makes it harder and difficult to get money. During COVID as well, so many of us business owners, if these occur twice or more now, we're under our third where we're actually seeing this, and we know that we've got to stock up on money to be able to move on to the next stage. Firstly, here on the stream, 2023 is going to be a terrific year for all of us. It's not doom and gloom when you see an economy shift. The reality is, as we speak, as we've seen in films like The Big Short, there are some who are prepared to take advantage of chances regardless of the state of the economy, as well as those who aren't. Since the year ago, going through extensive expansion and franchising as a result of figuring those things out. The economy changed, and all you really needed to be in that position was money, so businesses went through fire sales during this time, run by people who have been in business for 10 to 2030 years. When the economy changes, people decide to sell their enterprises at a discount since they have spent too much time working and don't want to do it again. They wait until things are bad before doing this. As a result, your company has several options to acquire rival companies, start new businesses, invest in real estate, and purchase large quantities of goods. When the economy shifts, everyone pulls back, and the cost of everything, including marketing and advertising. You should be progressing, and all the experts agree on this. When others are backing off, that is the time you should be afraid, and you should take advantage of that. The bottom line is that you have a fantastic opportunity to go acquire the real estate and landscape that they gave up. Did you witness this at COVID? The bottom line is that everyone else is going. They never offered takeout before, but now they're dominating the market, spaces on sidewalks that they never had before. They developed these add-ons that significantly increased the value of their company, and as a result, the competition failed. We need you to decide if you want to be in that world where, as the economy swings, some draw back and disappear. They're not even in business anymore, while others come in and advance their businesses at a rate that others said was impossibly fast. In order to succeed in real estate investing, grow significantly, and make 2023 your greatest year, you must first secure the funding you require, set up your company properly, and begin establishing your business credit, because this will enable you to obtain loans and credit lines. You can purchase a lot of the items you actually need to buy and obtain security and revolving credit for hundreds of thousands or even millions of dollars, like our clients can. What occurs when the economy swings is that credit providers substantially cut our limitations so they can free up credit to lend to other people, meaning if we're not building business credit first, we need to stop using personal credit. Using all of our available credit, creditors or lenders pull it back after they've used it to open new accounts because they become anxious like the rest of us, so they announce that they won't begin issuing more credit. Reducing personal credit limits makes it more difficult for us to use those personal credit cards to even try to fund our business. And if we do so, we really damage or destroy it. Massive amounts of new credit are going to be pulled back from people who aren't using it. Then we're going to use that freed up credit to go to other people. We need to seriously stop using personal credit cards to fund our business in order to stop harming our personal credit score. And let's be honest, open up the opportunity for us to still use our personal credit in order to obtain SBA loans and stuff like that. Nearly a third of our entire FICO score on the personal side is utilization, what percentage of our limits, and if the limits are lowered, we use higher percentages of those limits. On the personal front, we'll see that real estate prices will fluctuate. When they do, you'll have the chance to buy a new house, as well as any necessary investment assets. Although Airbnb might not have anything to do with your company, we still want to maintain our personal credit in order to take advantage of those chances, and having business credit enables us to do that while also giving us access to better. If we want funding choices like loans, credit lines, or SBA, we must keep our business credit in order. The importance of business credit really matters when it comes to getting SBA financing. Your business credit will determine whether you are approved or denied, how much money you will receive, and the interest rate. The bottom line is that you will pay once things are done. Building business credit is like the credit secret sauce that enables you to get approved for more financing at better rates, which is what you and I want to do to make 2023 our best year ever. This financing includes SBA loans, which is why we like them because the interest rate is low and the loan amounts are large, allowing us to get a lot more money with them. I'll give you a simple example. The first loan we ever received from Credit Suite was for $75,000 for our company. Because he had a very short term, you may have heard of merchant cash advances, Macaw's cash flow financing, or you may have even used some of those types of loans yourself. After that, we went and obtained an SBA loan for $325,000 in underpayments. And I both know where you should be on that end of the spectrum. You want to get a lot of money and pay a lot less, but the only way we can do that is if you get their longer terms loans, and longer terms SBA loans we can't get. Those without having good business credit. We need to build good business credit because it's very important to be able to get those loans. The enterprise value of your company looks if you are the leader, the CEO, president of your business, your number one responsibility is to make sure that you increase, that you own the enterprise value of your company. You are responsible for how much that an entity is worth, and it means that you need to make sure that it increases. The bottom line is that the more your company is worth, the easier it is for you to get more money to make it worth even more money, but part of this is due to the fact that you receive more when you sell. You could choose between Company A and Company B, and off the same and equal, and one company has $1.5 million under valve in credit that comes with it, and the other is, oh, there's no competition, gives you a leg up while you are in business. The one with the $1.5 million under valve in credit comes with it. The other thing is that it also offers you a significant edge in raising the enterprise value if you ever want to raise money, running the business to get the money you need to grow it, or to sell. Now, what can you use business credit for? Well, first of all, it increases your borrowing power, because what I find is that 85% of what you need to buy you're able to use business credit. I say that because the more money you need to borrow, the harder it is to get it. For example, if you want to borrow $1,500,000 or $1 million, you have to jump through hoops that you don't have to when you're looking for $410,000 or $50,000. Therefore, what we want to do is lower the amount of money that we need a loan or credit line for. For example, I don't need a $500,000 credit line. Instead, I need a $250,000 credit line. To achieve this, we strategically use business credit. If you run a flooring business, you can use business credit to buy all of the supplies needed for your jobs. If you're a general contractor, you know the importance of using business credit to only get a $50,000 credit line and make that work. Construction site. You can use our business credit for almost 100% of what you need to buy to be able to do your job. The bottom line is that if you want to utilize company credit to purchase anything that we can purchase, there is very little that we may need a loan or credit line for, such as payroll, for which I would want to use my credit lines and loans. This kind of money management plan is permissible. In addition to increasing the worth of our firm and positioning us to be eligible for better financing, using this asset enables us to use business credit to buy the things we can afford. This offers us more purchasing power and the ability to use loans or credit lines for these items of our expenses, and it also makes it simpler for us to obtain loans and credit lines that we can use for payroll and other purposes. I'd rather try the NAV Monterey service because for some reason my DMV is showing different data files under LLC and LLC in my business. Ultimately, if you ever change addresses and the bureaus don't notice that you do, they just see a new address for your business. They frequently create duplicate addresses or merge information on the same business from multiple businesses with similar names. Credit reports can help you from just your comment, but the problem is that if you ever change addresses and the bureaus don't see that you do, they just see a new address for your business. It may come as a shock to business owners, but between 50 and 70% of defaults are caused by fundability. We simply need to ensure that our company is structured properly. This is not due to poor personal or business credit, nor is it due to low income. Lenders and credit issues have a really basic sniff test that you must pass. If you pass the sniff test well, then you're going to get approved. If you don't pass the sniff test well, then you just never even get into underwriting. You just dump the base secret area of what you even looking for. Want to get an LLC or a corporation? We need you to be aware of what our code is. We need to make sure congruent in our business credit reports on our tax returns everywhere it's listed. We want to have a separate office set up the off for the business. Even if you're working from home, that's okay. Don't use a home addresses or UPS or PO box you want to. Gives you a zone of credibility. The phone number, separate phone number and email specifically for your business. Make sure your business email matches your URL for your website right. Make sure our phone number is listed in 4.1 and any online Yellow Pages directories. Ensure that all the information provided online is accurate. Set up a separate merchant account and bank account for our business. These are things that legitimate businesses have. You know that these are not things that someone who is just testing a theory and working from home would have. If you're not credible, it's that simple. Incredible. Have a lovely day. Go somewhere else. If you are credible, let's dig deeper and see whether you need to prove yourself to us. Between 50% and 70% of business owners use their phone as their primary means of communication. Get stuck right there. They couldn't have gotten the money they wanted. They didn't get the money they wanted because they didn't pass the sniff test. This is the fundamental overview of how to pass the sniff test. He can also go to If My Team Is Here. Type in the URL for business owners to be able to go and get our free mini course on fundability. I believe I got this right at one point. I believe it's Sweet Calm Foundation. This will walk you through everything you need to know. I did. He also needed to establish a business credit reporting agency account with Equifax, Experian, and again, you can go to creditsuite.com/monitoring, and to get your credit monitoring it's like $24 a month for all 3 bureaus. If you go anywhere else it's considerably more money. We're even cheaper than that themselves because that lets us you never know if you have problems unless you pull those reports. Pull your credit reports and check what's there. We can help you more. Feel free to call for a free financial assessment bed at the end. Thank you for watching this video and your likes and shares. Don't forget to subscribe the channel and leave the comment with ideas which else topics you're interested to watch. Thank you. See you. Bye.